Hello everyone, this is Matt Callahan with Civic Center Home Loans. This is tax time. It's time to think about filing your 2009 federal income taxes. And if you're also thinking about buying a house in 2010, it's important to take into consideration the way you file your taxes can actually have an impact on your chances of buying a home in 2010. Now, Civic Center Home Loans is not a tax advisor, and we're not here to give you tax advice, but we do want to let you know about certain things that people do sometimes in their tax returns that can have a big impact on your home buying power. First of all, we see that some buyers will claim unreimbursed employee expenses on their federal income taxes. In other words, instead of just claiming the standard deduction, which is available to all taxpayers, they will file a Schedule A and itemize their tax deductions. And one of the big deductions we see often is a claim for unreimbursed employee expenses. This means that you're telling the IRS that you were required as a condition of your job to expend certain monies that your employer did not reimburse you for. When you do this and you apply for a home loan the following year, the underwriter is going to look at that on your tax return and require that we deduct that from your current earnings. And depending on the amount that you claimed, this can result in your loan either being denied or, in the best case, having your loan purchase power reduced significantly. So please discuss with your tax advisor the value and benefit of claiming unreimbursed employee expenses. This could have a really negative impact on your home buying power in 2010. You may be better off just claiming the standard deduction. Second, I would like to talk to our self-employed home buyers or home buyers who own a business. We see very often that in your tax returns, as a strategy for reducing your tax liability, self-employed and business owners will deduct most of their, or exclude most of their business income with business expenses so that their net business income is very low. Obviously this lowers your tax liability, but keep in mind that we have to approve your loan based on your net taxable income. So if you decide to exclude most of your business income with business expenses, you probably will not qualify to buy a home in 2010. Your loan will be denied. So that's a trade-off you may have to make. You may have to claim more business income and pay higher taxes for 2009 than you may have in previous years, but this will be the only way that you could qualify for a home loan this year. Third, we work with many individuals and families who are interested in using some of the government assistance programs offered by federal, state, city, and county government agencies. Almost all of these agencies require that you be a first-time home buyer, which means you haven't owned a home in the last 3 years. So if you decide to claim the mortgage interest deduction or property tax deduction on your 2009 tax return, perhaps you're claiming that because you lived with someone who had a mortgage and they weren't claiming it on their tax return, but you decided to claim it on yours, please know that most governmental agencies will decide based on that you are not a first-time home buyer. They will assume that you own a home, and it'll be very difficult to prove otherwise. So our suggestion is not to claim the mortgage interest or property tax deduction unless you actually own a home and have a mortgage, in which case you would not be considered a first-time home buyer. Finally, and this is perhaps the most simple, but it's very important, you have to file your tax returns. We need to get copies of your 3 most recent year tax returns. So if you haven't filed for any of those years, now's the time to catch up and file your return, because without that return for all 3 years, you will not qualify for most home mortgage and government assistance programs. So thanks a lot for listening to this message. Please check out our website, gohomela.com, for more information on buying a home in 2010.